Hey, what's up everyone? Hope everyone is well. Welcome to today's Zoom session where we'll basically, as usual, cover the markets. I'll be taking you through the analysis today yet again, and then from there we'll see what's up. I won't lie, today I don't have much trades. Like, I don't have any trades running. Most of my pairs are really just moving sideways. I've not seen any. We're within a ranging band, and I don't force markets. I won't like. And normally within a ranging band, whenever market is in such a level, I'm not a ranging trade, I'm a trend follower. So most of my trades will be following the trend and all that. But I don't have any trend that's forming. We'll go through that in my analysis. I'll show you what I'm seeing. But what normally happens whenever we're ranging, remember, the way I normally trade, if you've gone through our course, if you've taken part of our course, remember I'm always talking about impulse, correction, impulse. So I'm looking for an impulse, so direction of the trend. A correction will come in many different forms. That's why I never trade corrections. It can come in the form of a ranging market, just a sideways movement. It can come in the form of a flag or a wedge or a triangle or a double bottom, double top, or triple tops, triple bottoms. What else? Ascending triangle, descending triangle, such. So normally, sometimes it's best to sit on cash. I don't fight within there. Normally during a breakout is when I want to look for a certain trade in anticipation of the trend continuing. Okay, so that's what I'm looking for. And currently most of my trades are still within that ranging band. So I'm paying a lot of attention, because normally after long ranging time, what normally happens, sometimes there's normally a catalyst that comes in the market that gives it that momentum. But sometimes market just breaks out in a certain direction and heads that way. So I'll do a few analysis. I'll look at a few things over here, show you what I'm looking at on my pairs, my usual ones. Maybe you can skim through a few other pairs here and there, and then we see what's up. So let me share my screen. But I hope you're all well. Please ask any questions if you have. Please ask questions. Here we go. If you have any questions, please ask. Please do not hesitate. So cool. What are we looking at? So let's start with dollar index. Just a rough view of dollar index. Look at what is happening, what's happening. So last week when we had NFP, I remember I did this on Monday. I gave that information. I always pay attention to how we break a certain level, how we respect a certain level. I always pay attention to that. And if you've gone through my analysis, especially if you're learning from us, from our course, even if it's not in the course, if you go through our YouTube channel, you'll understand my thought process of trading. Everyone has a different thought process of trading. So what I'm normally looking at here, I want to pay attention. I always have to look for key levels. Like you can see, I have one down here, I have one over here. Okay, so basically this pattern that formed over here is sort of somewhat of a inverse head and shoulder over here. So we have this shoulder, market came up, formed that neckline, got a break, formed that head formation, went back in, formed another support, and we got that last push for the head and shoulder formation. Now what happened, we broke this neckline to the upside. I was very bullish on that one, but what happened after that, market broke and got a slowdown in momentum over here. This is the 4-hour chart. If you look at the 1-hour chart, that breakout, so here, so around up here, so we got that breakout, very good breakout, and then a lot of slowdown in momentum. Okay, and what happened after that, NFP acted as a catalyst back to the 4-hour chart, and market fell back below the support level. So this is it was a resistance level, got broken, became support, immediately market came back below it. So I like teaching this when I'm normally in class with my students, like what I was teaching yesterday, a client. What I'm normally telling them, it's sort of like a building. Okay, so a building, even the building which you're right in right now, that which you're listening to this, the floor you're standing on or sitting on is the support. Okay, the top part is the ceiling. Okay, but each building you're normally in, it has upstairs, downstairs, upstairs, downstairs. If you climb to the upstairs, what happens? What was acting as a roof or a ceiling to you now becomes the floor. So if you climb to the upstairs room of where you are, it becomes the floor. So normally what you want to see, as long as you remain above that floor, we are on the second level. So we're on the next level, we expect market to come, retest maybe, and continue to the upside. But when you see such a break, so a break and a close below, what does that mean? It confirms that the market has gone back to the previous floor. Now that is acting as a ceiling. Okay, so this is what happened. A break, we got this correction over here. Remember, this was on Monday. Market was starting to pump up during the opening session of London, and immediately we closed back in. Market closed back below this resistance level, which is acting as a support. So as long as we're within this ranging bound level, market can still fall back to this level, get some support, get some resistance here. Until I see a solid breakout is when I'll have a trade running. So that's what I'm watching on this one. If you go to the 1-day chart, just looking at the long term, you're basically seeing that we're at a very crucial level. This is a support level, behind here acting as support, and now we're acting as support here. So getting a good break of this level can indicate a continuation, just like what we got here. So if you look back at history always gives you that data. So if you look at here, so a good solid breakout like this, if you get such a breakout to the downside, is when now you can look for more shorts. So you can see this was a good breakout, a retest, fall down, another retest, and the continuation of the trend. So that's what I'll be waiting for on this one. If I move on to my next pair, Australian USD-CAD. So USD-CAD normally moves sort of in the same direction with DXY because it's dollar acting as the base currency. Okay, so you can see long term we've been having a very long term downtrend. Market has really been falling, so lower lows, lower highs within this pattern. So what I'm normally paying attention to, and I keep saying this a lot, normally after we have a strong trend to either side, so you can see this pump to the downside, there was no significant correction over here, just a bit sideways movement. Like you can only see two blue candlesticks, this one and this one. Apart from that, market has been in a very strong bear trend. So normally two things can happen immediately after a strong trend to either side. You can either see a quick retracement, okay, a quick correction back up, or you can see a sideways movement which can last for quite some time, and trying to trade that sideways movement can really hurt you a lot. So if I zoom out and see such a trend, for example up here, so you can see up here the opposite happened. So what happened, market really strongly moved to the upside, quickly had that drop back down. So pay attention to how market forms such. Remember, I keep saying I normally look for market structure and trend, read a lot from candlesticks. So the more you practice this, the more you understand. So what's happening down here is the opposite of that. Market moved to the downside, a lot of sideways movement, and normally what you can see after this, there can either be a correction coming in or just a continuation to the downside. If I go the 4-hour chart, you're seeing this one, just like dollar index, we're stuck within a sideways movement ever since around May 7th. Market hasn't really formed significant lower lows and lower highs, and that's why I keep telling you I don't have any trade running. Yes, I tried buying. I had this rejection over here. It was acting as my double bottom. I had this buy, but immediately after this drop, okay, so I pay attention to this closing. So after this rejection of this level and this candlestick engulfing all this, I decided let me stick out of that trade and wait for a better information for market to give me, because whenever you see such a close, you're better off even taking a short position than holding a long position. So after that, this week, that was last week, this week I don't have any trade running. I'm still watching this. If I got the 1-hour chart, so I hope you're understanding my thought process of how I'm taking trades. So this normally also allows me not to have so many trades running at the same time. Okay, so basically what I'm saying, I'm just trying to break down what is actually happening. You can see this is where I got my trade early on last week. Market went up, came down, I still held over here because market hadn't really given me information of a turning. Then market rallied all the way up. After getting this rejection over here, when it started falling is when I came out of that trade. And basically you can see this was just a breakout, a retest of this line, and a bit of a buy over here. But anyway, long term we're still within the trend. I'll be trying to break it down further to get a better understanding of that. If I move on to my next pair, which moves very slowly, like one of my students was saying yesterday, this pair moves slow as hell. But anyway, if you understand that the market moves slow, the best thing you can do is use different position sizing approach. So if the market moves slow, target for also a very, don't target for ambitious targets because you'll really wait, and also put a bigger position size and better risk management. Okay, so same thing, just like USDCAD, sideways movement. I've not had a trade of this one ever since I got this buy. So this buy over here, and market came falling back down. Ever since that time, I've not traded this pair because for me, I've not seen any pattern to trade. Like a lot of sideways movement. I see Collins asking if I'll post it on YouTube. Yes, I'll post this on YouTube later on today. So if you want to rush somewhere, cool, you'll get this analysis. But yeah, just to continue, a lot of sideways movement. Trying to break this down on the 1 hour chart, I'm just seeing a lot of over here. So this is a trend that I'm having, a sort of a pattern that I'm watching forming. You can see market has been respecting this, a touch over here, and now sort of a lot of sideways movement. This week has been basically because we had this pump last week. Ever since, this week has just been this noise. So I'm just waiting for a better analysis. Something I forgot to say on USDCAD, later on today we have analysis. Bank of Canada talking about the interest rates, monetary policies and all that. So around, I think that's 2 p.m. or 3 p.m. Pay attention to that. That one can cause a lot of catalyst on USDCAD. But anyway, so this is a lot of sideways movement. So I'm still watching this one. No trade really. Last week when we got this break, I actually thought market will really fall, especially if I zoom out. If you look at this long-term analysis, what I was paying attention to, you can see this lower low, lower high. I was expecting a lower low to be formed. So after this breakout, I really didn't expect market to go back, but often, as a rule, market normally does what you do not expect to happen. But if you look at the daily chart, remember I said the trend is your friend, and this can still continue to the upside. So I have this sort of a channel-like formation. So you can see a nice touch. So I drew that line, duplicated it to the downside, and I got this line. So I also have to pay attention to that. So I'm not really relying heavily on the forward downtrend. The trend can really continue to the upside, especially if that dollar continues falling. This one can really rally further up, following the likes of gold and all that. So that's what I'm watching on US Aussie dollar. Looking at gold. Let's go to the forward chart. Remember gold, I said something before I go to the forward chart. So long term, expect very bullish long term trends. Okay, so let me put this on the forward. 1 sec. So as I said, remember gold, I'm very bullish long term, okay, but as usual along the way you cannot miss the market really correcting. Okay, so once you got this double bottom over here, in line with this first touch, second touch and third touch, which was also a 61.8 Fibonacci correction, there's a lot of confluence around that region at the 1675. Market really rallied. So also during this rally, no crazy significant correction. And remember, a target I had in mind was around this level, the 1955 level. Let's say 1955, between 1950 and 1955, a very good conservative nice target for some bulls, because you can see this massive, look at this massive previous rejections. So I'm pretty sure if we get to this level, either two things can happen: a strong rejection, which I'm waiting to see if that will happen, or a massive break, a more of a correction. I'll break down that on the forward chart. But I am seeing once you get to the 1950, there can be a major correction before we get that pump to the upside. So why is that? If I go to the forward chart, we have a trend line that we're paying attention to. Okay, and if I'm following my relative analysis quite well, quite smoothly, I can see this was the first impulse. You can see a correction forming the second wave. And normally why I use the relative is because it gives me that structure of the market. And normally this tells me market moves in 5 waves when we're following the trend, and a corrective waves of 3 patterns. Okay, that 3 pattern of ABC. So I push to the upside, third wave, okay, a correction to the fourth, a touch of the trend line. So you can see that beautiful first touch, second touch, and a third touch over there. And I can expect market to really rally up here to the 5th level. We have just kept that highlight at the 1955 level. Quite a good significant level. So what I'm paying attention to is where market currently is. If you go to the forward chart on gold, so gold is quite volatile. It's very volatile. Like for example, you can see this pump over here. Market dropped all the way from around above the support, which is in 1890, all the way down to 1880. So if you had if you had less than 100 pip stop, this was quickly just a stop hunt, and market rallied up. That's the same thing we're seeing happening over here. So market went up, got that retest. You can see we pumped to the downside, and sort of now we're sort of using that as our support. Okay, so let me zoom it in more. So you're basically seeing this is acting as a support. It was a resistance previously here, broke to the upside, acted as support, got that strong break. So remember, I'm always talking about that. How are we breaking these certain levels? Are we getting a weak break or a strong break? So we had this big break, strong break to the downside. Market came, rejected it, sort of got this pullback, had this strong break. So you always look into that, and a lot of support. So a lot of support is acting on that, and that is on the 4-hour chart. So normally on this one, you want to really wait for a significant break before committing to it. If you get a strong break to the downside and a close, I always wait for a close, because if, let's say, such a trade like this one, you jumped into that trade before it closed, then market really what we like saying in Kiswahili, chengad you. So pay attention to that, pay attention to the closes. So that's what I'm watching on this one. If this acts as a support, if market is unable to break, expect a strong rally to the upside in respect to this trend line. That's what I was saying. I'm expecting market to go to the upside and get that short break from the 1950 level. I'm sure many people have set their targets there. The people who are bulls and the long-term shorts are quite there. Once you get that, there can be a massive correction before the trend continues. Okay, so I think that's what I have on my currencies and gold. If you go down to the currencies, let's look at currencies. Let's look at GJ, the one I saw someone asking about Australian CAD. I don't trade this one as much, but of course I do some analysis, just breaking it down. So for that person who asked, let me just show you what I was looking at on this one. 1 day chart. I haven't looked at this one for a while, but something I was paying attention to. Remember, we say we are paying attention to how market approaches key levels. Okay, so market was quickly approaching this support level. Okay, so a nice significant support level at that region. If, let's say, you expand it, you take it as a range, so around that level. Okay, so you can see previously this was, and if I zoom it out, do we have anything significant? Not really. So if you pay attention to this level, so we haven't been below this level since 2020 June. So we got that strong break, acted as support, market went up, came, acted as support, and went and formed new highs. After forming that new high, we've come back down to that level. Remember, I always say how are we approaching a certain level? What pattern is forming? Market was quickly coming down, quite nice, quite smoothly. Once we started coming to this level, we started sort of slowing down in momentum. So sort of like market was expecting that resistance level. And if you go down to the 4-hour chart, you can clearly see we came down in the form of a ending flag sort of formation, or ending channel, depending on how you call it. So we sort of had this pattern. So you can see this first touch, second touch, look at that beautiful third touch, and we got that rejection from that level. So you want to pay attention to that level. Market can really correct before that continuation continues. So I don't have a solid analysis on that, but watch that pattern, trend, break it down on your own and understand what's going on. Another thing I'll always look at is my moving averages to know the direction of the trend. So I'll always try and look at that. And basically what I'm seeing, sort of market really changed direction. So if I was trading such a pair, I'd be really looking for shorts. Okay, so I had this impulse to the downside, correction, respecting that moving average, another impulse to the downside. You can expect some correction over here, just like what we got over here. Okay, we can expect some correction, use some Fibonacci, and market can continue, especially if we break that level. If not, if this level is able to hold, if this daily chart is able to hold, then expect some deep correction. But normally when I have my moving averages, normally when we're above it, I'm normally trying to look for shorts, longs, and when we're below it, I'm normally looking for shorts, because it's giving me the direction of the trend. So let's say if this market really corrects, expect to see market correcting to around this level. This previously acted as resistance. Okay, so I'm just using my key levels to analyze. That's how I normally analyze. So you can see this support, very strong support, like I keep saying, very strong break, a retest, a move to the downside. If you get any correction, also using my trend line, also pay attention to that. Like I said, I don't analyze this pair much, so I'm just doing most of the things off my head right now. So you can see this is quite a good trend line. Can this be a channel? Actually, not really, but sort of it can be. If I take this, try and put it there, try to analyze it quite well. So I'm just doing this off my head at the moment. So it looks quite solid. You can see this touch, a touch here, a touch here, a touch here. So quite a rejection. You can wait. I'm seeing a lot of confluence around here. Market can come retest this moving averages, this resistance level, and this trend line. So another touch here before any significant level. Anyway, that's what I have on that one. Whoever asked, I hope that has helped. GU, let's go to GJ first. GJ, after getting this top, market has really I remember I said this was a good shot. Let me get rid of this MS. The problem about the trend, if you're trying to trade against the trend, you can really suffer, okay? So trying to get a shot, yes, this market can fall, but you'll really struggle, okay? Because going against the trend is quite difficult. Because pay attention to this impulse. Look at, for example, impulse, correction, impulse, correction. The impulse are quite good. That's why I'm normally looking to trade in the direction of the trend. But trying to get these shots, you'll really fight with the market. So I'd rather wait for a correction. I still expect more correction on this one. I still expect this GJ to continue dropping. As much as it's disturbing over here, expect it to come back down at least to these levels, okay? On the daily chart, we have that sort of channel-like formation. So here we go. Channel-like formation. After getting this top, I expect some correction to come through. If you get a retest of this trend line down here, which is quite far, around the $148 mark, that can be a quite good buy around that level. But anyway, that's on that one. GU, I don't trade this one. This one is more of Ken's pair, but just to take you a brief breakdown using the market structure strategy. Direction of the trend has been your friend for the longest time, but of course some resistance at this level, okay? Some resistance here, and just looking back at history, I can see we sort of had the same problem around this level. So you can see that's why I keep saying looking back at history can really help. So if you look at this, it's sort of the same thing. So market, just like what you're seeing here, market came, had that spike, okay, a very good spike over here. Let me expand this. A good spike, market came again, got that rejection. Over here we got a quick correction, market came back up, broke it again, then came back, acted as support. Ever since, we've not been back below that level. So same thing you should pay attention to here. Market has reached a significant level. This sideways movement basically means a lot of indecision. So a lot of people are sitting on cash waiting to get to see if we'll break that level and go into new highs, which haven't been formed since the start of the year. If we go into new highs, then this can act as a good support for the year, okay? So using that as a support of the year, market going higher. If not, we can get a rejection, and what we'll be paying attention to is this support level, okay? If market comes back down to this support level, that's what you want to pay attention to, which is in line. Let me copy paste this. Come on. Which is in line with this level, okay? So you want to pay attention to that. You see what I'm saying? Just using normal breakdown analysis. Resistance, a strong break, retest. Remember what I keep saying, we've gone up to the next floor. Now this one is acting as the floor, okay? So you've gone up the ceiling, this one is acting as a floor. Now over here, what you can see is basically a retest of this level in line with the trend line and a push to the upside. Or in another case, you can get a break of this level, act as a retest, and then market continues. So normally what I'm doing when I'm analyzing the market, you have different scenarios that can play out and preparing to trade them in advance before they come, okay? So that's what I have on that one. I see Luange asking for Euro USD. What do we have on this one? I'll normally trade it sort of the same way I look at dollar index, okay, because they move inversely with one another. So long term uptrend, okay, long-term uptrend within this channel like formation. You can see this first touch, second touch, third touch, very good correction over here. Market has continued in the direction of the trend, okay? So if the dollar index continues dropping, then you'll see this one continuing to rise, okay? I remember last week I was paying attention to this support level, resistance level, I mean. So you can see this resistance level had some time before breaking it, but got that good breakout, then a lot of sideways movement. So normally when you get a breakout of a certain level, you want to see a lot of follow through. Like for example, you can see this level, breakout, retest, a good follow through to the upside, a retest again, a good follow through. But what happened with this one, you're getting a breakout, correction, breakout, push to the upside, correction, a lot of sideways movement. Eventually we broke back in, we're breaking back out. So normally what's happening on that level, one thing I want to pay attention to is my key level a significant key level. So you always want to ask yourself that question. Are we having a significant key level or I have to adjust? For me, it's still a significant key level, okay? because it's still acting as support, acting as resistance. If you zoom it in, you can see resistance, break, acting as support, break, acted as resistance here, then we broke up above, now it's acting as support. If I go to my 4-hour chart, now if you go to the lower time frame, you'll find it quite noisy. Okay, so at first I remember I had this trend line, push to the upside, we got that break, and now market is within this ranging level. Okay, so what I expect on this one, if the dollar corrects, okay, that dollar index, if we get that push to the upside, what I'll expect on this one is a correction back down to this support level. Okay, still remember, long term I'm still looking for bullish trends. Okay, so this support level can act as a good support. You can see it was resistance, broke, retest, break to the upside. Okay, we can get a correction back to that level. If not, if market breaks that level, expect a breakout, retest. Okay, a solid breakout, not a breakout like this one. Okay, so you don't want to see a breakout and then a sideways movement. The good analogy I like using is sort of like a rocket. If you have a rocket, it starts going up. You do not expect it to continue staying at that level. You expect it to continue going up. If you start going back down to that level, that rocket can explode or something of the sort. So this breakout and sideways movement is really cautious to me. You want to pay attention to that. So until you break that level is when you want to look for those longs to the upside. If not, market can really respect this. Is there really a trend line happening over here? A counter trend line. Sort of something of the sort. Let's see if it's a channel. Yeah, so this sort of forming like a channel like formation. Okay, so you also want to pay attention to that. You can get a bounce over here and a further push to the downside, which is actually a good significant correction. Okay, normally you are getting that impulse correction in the form of that pattern. And something else I can show you, you can use your Fibonacci, taking this as a support, taking this as the end, up there. I want to wait one sec. Up there, I want to see the 61.8. Let's see 61.8 level. I want to see how market will come and respect these levels. Okay, if we get a correction, if market continues dropping from this level, can we come and get some correction around this level? Okay, so instead of waiting for market all the way to this level, pay attention to this sort of impulse correction, and I've done this in my courses, and impulse to the upside. So pay attention to that. So I hope that has helped. That's all I have on that one, and that's it for today, man. I think I've done a solid analysis on most of the pairs, quite solid, quite straight to the point, and yeah. So any questions? I see time is almost up. Yeah, I think I've covered for you guys most of the stuff. I don't even cover Aussie dollar card, but I've done it today. I hope that helped. If you trade it, pay attention to that. So I see no questions. I am happy to see you guys as usual. Thank you for tuning up. I'll see you guys on Friday, and the rest of the team will join us then. But that's it from me. Have a wonderful day, wonderful week, and take care. Not to blow account. Losing money is fine, but don't blow account. And understand why you're losing money, because that's the tuition fee you pay for understanding this stuff. But anyway, that's it from me. See you guys soon.